Welcome back to the channel. I hope you're having a great day wherever you are around this beautiful planet of ours. Today, let's continue with our macro series of finding a Bitcoin bottom in amongst all of this fear and crisis and bad news that's going on out in the world. Now, the reason I continue with this is because it's the exact same thing that happened at the tops of the market. At the tops, everyone was extremely bullish, extremely greedy. They were waiting for higher and higher prices as if this could never end, not taking profits. And the feedback throughout the course of the bear market was, I wish I'd found this information sooner. I wish someone was talking about this at the tops, meaning why weren't people telling us that the top was in? The same sort of thing around the bottom. And the preface to this is you don't know exactly when the top is going to be in. You don't know exactly when the bottom is going to be in, but you have a fair idea of the timing. And once the timing comes in, then you have a fair idea around what sort of price range. Now, of course, on the channel here, I've been talking about a low from June, looking at around that 17.5. And previous to that, there have been possibilities of lows if the market found higher prices and broke resistance, which it did not in the case of something like January into the top of March. It did not break that top in December, which gave us a signal that this was just a bear market rally and we were going to see much, much lower prices from that point. And so that's why we also emphasize pyramiding when it comes to anything that we look to do for dollar cost averaging, or wait for the macro confirmation signals to let you know that the bottom is in, which obviously come many days, weeks, months after the low. And of course, some people don't want to wait for this. We're all a little bit eager to start degenning again back into the markets, which is why today's video, part of the macro analysis series, it's here on the channel. That's why we are continuing with this, looking at other major signals and indicators in the markets that we've seen in the past. Now, your feedback on yesterday's video was absolutely amazing, as was liking up the video. 1,100 likes with only 14,000 views as well. This was just put out last night, so I'll leave a link to this at the end of this video. We're looking at Fed pivots, interest rate rises within second half of real estate cycles. This video is quite deep, a lot of information here to help us with the next 5 to 10 years within the markets of the stock market, Bitcoin, and real estate. So this will be at the end of this video, but for today's video, we're going to keep it a little bit lighter, looking at market sentiment and the timing of the lows for Bitcoin. Now, of course, we focus on charts. Charts are history of the markets. Charts give us a good idea of what may happen next. There's no guarantees in the market. Everything is based on probabilities. And if we can learn to read what the probabilities were previously, based on the history and the data that's in the charts, what people have done, then that gives us an insight to what happens in the future. Now, there can be some feelings around charts saying that this is only the history, it doesn't represent the now, it doesn't represent the future. And of course, that can be true as well. But we just have to go on what the history has given us, just like fundamentals and just like the news, which just tells you what's already happened in the past. Now, I'll read you one thing from an old book here, 100 years old, Gann, of course. A lot of people say that charts are of no value in determining the future. Remember, he wrote this 100 years ago, and people thought the exact same thing before, even though it has played out time and time again. The rules for our technical analysis continue to repeat over and over again. That they simply represent past history. That is correct. They are records of the past, but the future is nothing but a repetition of the past. Every businessman goes on the past record of a business in determining how to buy goods for the future. He can only judge by comparison with past records. We look up for the record of a man, basically their CV, if you're going for a new job. And if his past has been good, we judge that his future will be good. Think of the current examples that we have, something like SBF, Sam Bankman-Fried. We didn't have any history from this guy. Brand new into the markets, got his research company within the start of a bull market. Now, his past shows that he is not trustworthy. No one is going to trust him moving forward from this point. Hopefully they don't. Some will if they have forgotten his past. But I'm sure you here have, if you've been in the market for a couple of weeks, you would have seen that history, and you're probably not going to trust him moving forward. This is the exact same thing that we do in the charts. The same thing goes for politicians, as we said, for businesses, for if you're looking for employees for your business. What are your thoughts on Trump? What are your thoughts on Biden? Would you continue to re-elect these people knowing what you know about their past? It's the exact same thing, and that's what we do here in the charts. Charts are simply a picture which show plainer than we convey in words. The same thing could be told in words, but you grasp it quicker when you see it in chart form. You would recognize a man and his good and bad qualities quicker from seeing his photograph than from reading a description of him. With that said, let's have a look at these signals that have come up in the markets, looking specifically at market sentiment, which of course is made up of humans, and we can see what they do when it comes to certain times. So let's draw our attention to the fear and greed plane here, and we have significant lows that have come into the market. So we know this in terms of price and time as well. So the first one here is December 2018. This obviously goes into January as well. Then we have the next low, March and April 2020. We have some more significant lows in May, June, July of 2021, and then also some significant lows here in the mid part of 2022, which is June and May of 2022. In these four cases, we've seen the market low, and then after that point, the market's risen up into a peak. The only one that we saw the market drop into was here back in August, September area of 2019 after that really fast peak in the market, which is why I'm saying it doesn't work 100% of the time. But if you layer it with other signals and rules in your trading plan, which you can add some simple stuff that we talk about here on the channel, you're not going to be too caught out with these. And if you are, then we also have stops in place. So just looking at these other 4 times in the market where we've had a low in the market sentiment on the fear and greed index, we've seen the market rise out of these points into new tops. And on each of these occasions, we've seen it happen with higher lows and of course the pricing as well. And what we're currently experiencing right now is potentially a higher low in the market sentiment. Basically, the feeling of the market, the feeling of the investors out there, even though that we've seen prices go lower, is still sitting higher than the fear that we experienced back in the lows of May and June of 2022. So the next thing I want to draw on here is the tops. So we're just getting a top in here, basically the downtrend, and then the breakout of the downtrend happened again over on this area, again through these levels, and potentially that's what we're seeing now. Should we see the sentiment of the market increase, then we could almost say that that was potentially the bottom in November, even if the market price comes back to it or close to it in the future. Similar to what happened back here. So this was the actual market low for Bitcoin. This is December, January 2018, 2019. So what we're looking for now, if we just clean this up, is a potential breakout of the bear market downtrend of the fear and greed itself. So once you start to get that breakout, this can happen very, very quickly, like we saw in the previous cycle in 2019. And the collapse from those peak prices, basically from these levels right here down, can be very, very shocking to the market quite quickly because of the volatility that's already in play at that point. And it's not until we start to reduce the volatility that the feeling, which is exactly what this covers here, the crypto fear and greed index, or the market sentiment. Once the feeling starts to subside, then you start to see it happen within the charts as well. And so somewhere between this sort of 40 and 20 reading seems to be lower volatility across the board here, and the market is able to start finding a base. So with those two examples, we were looking at the market cycle bottoms, and we'll look at timing on that as well. But there's also the other example here, or a significant example of time spent underneath this 30 level that showed a lot of extreme fear, and that was the low after the top in April of 2021. So how does that work into all of this analysis here? Well, we still got to bounce out of those levels, and we're still looking at a breakout of the lower highs. So you're just drawing this straight down, and you get the breakout of the lower highs into that next peak of the cycle. So after every single one of these lows that have come in through the feelings in the market, you still get a bounce out of these levels, whether it's to a new all-time high or just a local top. Maybe a significant local top is still to be answered. And I would dare say that out of this, should we breakout, which looks pretty convincing at some stage, probably in the next couple of months, I would say we're not going to see a new all-time high exactly from that point, but we will see a significant high before the market comes back to test some levels. And because we're still in a very turbulent time, there's a lot of volatility going on, there's a lot of fear in the market, then any sort of move to the downside could be quite severe, like we saw in 2019, even though the prices didn't drop all the way back down to these lower levels. You can see the market went to about 9,000, 8,000, got all the way down to 6. This could be quite severe in terms of the market sentiment, even though the pricing was still higher than the previous low, which in itself is a bullish signal because you're putting in higher lows on the way up. Of course, this was the pandemic low that caught everyone out. We had extreme fast panic dump and then a bounce back above it. So if we get that again, that's basically a gift to us to try and scoop up as much Bitcoin as possible at those lower prices because it doesn't last very long. And then the market takes off from that point again. Next up, we have the macro timing events to discuss. Basically, the halving or the halvening of Bitcoin coming up in 2024. This is going to be on people's minds probably in the next couple of months. We're going to start talking about a lot because of the timing from the lows that we've seen in the past. But before I get to that, remember to check out the links in the top of the video description for Bybit and BitGet. These are channel sponsors. So yes, they are your shill links. If you feel like using them, go straight ahead. You've got plenty of massive sign-up bonuses here. And yes, you will have to deposit money onto the exchanges and trade on them in significant volume to get $30,000. I mean, it just doesn't drop out of the sky. But if you feel like you're happy with the exchange you're on, by all means, continue doing what you're doing. Just don't keep any more than you're willing to lose on exchanges from everything that we've seen in the past. Now, of course, we have to trade if we're in crypto and Bitcoin, so choose your exchanges wisely, do some research on them, look at the history of when they began, were they in bear markets, and how do they make their money. That's why I talk about these guys a lot and explain the differences in cryptocurrency exchanges during these periods in the market. Links are in the top of the video description for those guys, and if you want to store your crypto somewhere else, check out Ledger, link in the top of the video description there as well. All right, so on to the timing aspect of Bitcoin coming up 2024. Let's take a look at where the halving could be, working our way backwards in terms of timing to see if the low, if we're getting a stacking up of signal indicators for this low. Now, a quick look at 2012, 2016, and 2020 show that the halvings were May, July, and November of 28. But we're going to focus just on these two right now and then move forward to the 2024 halving, which is expected around March 25th of 2024. Each of these blue vertical lines are where the halving or halvening happened in the market. So you can see in 2016, 2020, and where we're expecting it in 2024. This, of course, will change based on the block time of Bitcoin, but you can keep up to date with it here by bitcoinworldwide.com halving. So just looking at the pricing so far and where we are in the cycle, the timing from the top to the lows in each of these particular cycles so far. Granted, it is only a few data points, so we obviously want to see a lot more. But in fact, that we've got the fact that we've got the timings happening, we have the market sentiment, and we have some good price coming in terms of the falls from the top, are all sort of starting to stack together for a longer term low forming in the market. Now, yes, I know I've gone on about June being the low, but when you look at the price here, it's about $1,400 difference, which isn't really that great overall. It's still within this zone so far. But nonetheless, let's work our way through this timing. Top to bottoms, 413-ish days. Top to bottom again, around 360, so a whole year. The previous one was about a year and 2 months, and currently we're about a year and a couple of weeks from that previous top. So we're roughly within the same sort of period that we've seen in the past. Now, working backwards from the halving dates or when the halving occurrence to the lows, the previous one in 2016, the halving, back to the low of 2015, was approximately 530, 540 odd days. So that's the halving event back to the low. We go forward to the 2020 halving to the low of 2018. So the halving was approximately May 2020, back to that low, gives us about 520 days. So a little bit shorter than the first cycle, possibly because people are starting to think about it. We did get this big run up in 2019. That was around the Litecoin halving, which is also happening for Litecoin very soon, which is why we've seen the Litecoin price increase as well. Back to Bitcoin, looking at the timing of this particular halving around March 2024 to the current low, it's about 490 days. So it seems like the low is catching up to the halving event. You can see around 490, call it 500. The previous one was 520, and before that, 540. So approximately 20 days. Over the course of a span of 4 years, a 20-day tolerance isn't too bad. 20, 30 days, a month either side here isn't too much of a big deal in my books, of course. So in terms of the timing from the top to the bottom, looking reasonably good. The timing from the halving, which we've only seen the 2 data points as well, working back to the low, relatively on track. Maybe it should have happened sooner than what it did in November. So it just means that it is probably late now for a low. And then in terms of the price down from that top as well, which we've covered in previous videos, sitting somewhere around that 80%, 78% drop from the top. And so when we marry that into the market sentiment as well, the fact that people are not anywhere near as fearful as they were back at the lows of 17K now starts to weigh in, starts to build this picture that the market is moving around a low. And like we've said many times, lows can take a long time to form, like we've seen in Bitcoin many times before. We had approximately 3 to 4 months at these low prices before it took off, and several months before that of distribution before the market dumped. Going back to 2015, you had approximately 8 to 9 months in these lower levels before the market was ready to take off. So if this is all within the same period, we're coming up to about 6 months from that June low, once we get to the mid dates of December, which will then bring us to around that 6-ish months, depending on where we start the timing from, which of course we'll continue to update here on the channel. That has been a macro look at the market sentiment using the fear and greed on the chart. Let me know your thoughts down below in the comment section. Do you think that a lot of these signals are starting to time together for the low coming in quarter 4 of 2022, the low for Bitcoin, that is? Let me know in the comments down below. Appreciate your support here with the like button. Get those fireworks going off as well. Check out the videos popping up on your left-hand side here for more macro analysis on Bitcoin. And of course, stay subscribed to the channel for more big updates like this as we bounce around these low prices. Have a fantastic day, guys. Don't forget those links in the top of the video description. Get going with it. And I'll see you guys at the next video. Until then, peace out.